Hey everyone, Danny Greco here, talking a little bit about what we've seen in the mortgage industry, which is nothing short of chaotic lately, and doing my best to really kind of generalize what changes have taken place there. Now, I will defer to any experienced loan officer and recommend you consult with them for a more eloquent and more advanced explanation of what has taken place. But essentially, what we've seen in the mortgage market, extreme volatility to say the least, but more importantly, what we've seen is a lot of, just like the housing market, the mortgage market has kind of been put on pause a little bit as we're in the middle of this pandemic. And what the consequence of that has been that many of these mortgage programs and options have either changed dramatically or in some cases might have been eliminated too. So for example, if you're somebody who has gotten a VA loan, an FHA loan, anything like that, these are what's called govy loans, government loans, because they're backed by the United States government, right? So the FHA, Federal Housing Administration, VA's Veterans Administration, these are loans backed by the United States government, which we really don't see too much of in Seattle. I mean, I honestly could not tell you the last time I had a buyer that was using one of these loans. I maybe usually get about one a year, but it's very rare. But in some parts of the country, especially, if you go to Bremerton where there's a huge military base, this is going to be a huge issue because everyone's VA there, right? So anyway, there's been a lot of changes to these programs that really came into place overnight. And again, it's going to be lender specific. So if you're thinking of applying or in the middle of applying, definitely consult with your lender to see if there's been any changes there. These changes can result or could be the result of anything that's changed within minimum credit score requirements. For example, maybe the minimum credit score was 580, that's now 640. Maybe they're requiring you, instead of having 2 months worth of reserves, to have 6 or 12. So there's been a lot of changes coming up there. Also, programs being eliminated completely, like down payment assistance programs. If you're going through a government state-aided down payment assistance program, those might have been eliminated overnight or might be on pause for a while too. All of this is a result of the contraction in this industry, right? They're having problems finding, and this is going to get a little deep, I won't spend too much time on it, but they're having problems finding investors for these loans. So when your bank, after they close your loan, cannot find somebody on the secondary market to buy that loan, that's problematic for them, because now they've got to hold on to this loan hoping that this buyer is going to pay it, and they're not going to get paid anything until they sell that. So when there's no market on the secondary market for them to sell this loan, they're going to shut things off or greatly reduce their risk by changing these programs to benefit themselves more too. So something to think about, and again, definitely consult with your mortgage lender, your local pro, who can give you more advice here. But this might all change too by the time that you get this. This is constantly changing, so keep up to date with them, and they'll keep you in the loop.